Thank you very much, Mira. Welcome everybody. Hope everybody's well. So as Mira has kindly just introduced here, today's webinar is going to be on how to close your funding round before the end of tax year. So a very fitting time, as it is our busiest time for fundraising within that UK market. Just want to note that this webinar is being recorded, so we'll aim sort of towards the end of the week to get that recording out to everybody, and also a copy of the deck as well, just so that you have that to hand. Looking forward to sort of jumping into it with everybody. Please note for questions, etc. We'll have different QR codes throughout the deck today that you can just scan and submit questions through there. And then at the end of the webinar, we'll sort of have 5 minutes to answer 4 or 5 questions. And alternatively, after this webinar, we'll sort of give advice on how to submit more questions if they weren't answered by myself and Bethan today. Awesome. So this is part 2 of a 3-part webinar series. Part 3 is going to be on the 11th of March regarding R&D with colleagues from Mike and also Ben there. So I'll give it a little second if you want to scan that QR code potentially if you're wanting to sign up there. Alternatively, it will be on our events page and also online as well. Cool.
Hi everyone, lovely to meet you. Just today's agenda, we're going to have a brief introduction into myself and Aaron, then just a little bit about why you want to close before the end of the tax year, what funding vehicles that we have at our disposal to help you do that, and then what it means to get your ducks in a row.
Perfect, thank you. And as I said, these are the QR codes that if you do want to submit any questions that we'll answer at the end of this webinar, they will be dotted out throughout the deck as well here.
Amazing. And back over to myself. So my name is Bethan. It's a Welsh name. I'll also answer to Beth if you do put that in the chat. I am a funding and equity strategist here at SeedLegals. I have been here over 2 years now, so helped over 650 founders like yourselves to start their rounds. It's my 3rd Q1 at SeedLegals, and I always love it at this time of year. So super excited just to share some insight with you guys.
Awesome. Yeah, and I'm Aaron. I'm an account manager here at SeedLegals. Ultimately worked within the fundraising industry for the last 3 years now. First sort of within sort of VC and partnerships there, and then transitioned over into SeedLegals to work a little bit more closely with the founders. Been here for coming up for a year now, so it's technically it's my 2nd Q1 because I joined towards the end of Q1. And again, it's a very fitting webinar given the time of year and given the end of tax year as well. Awesome. So as we get kicked off into today's webinar, a question that everybody wants answered is, why do you want to close your round before the tax year?
Thanks, Aaron. And I guess honestly, briefly on that, this is potentially the best time of year that you could have attended a webinar on how to close your funding round. We're currently in the busiest time of the year to raise. Perhaps I always say that the only time of the year that investors will have as much urgency to close a round as you guys as founders. Investor desire to invest is at its peak right now ahead of the next financial year. People going on holidays, people renewing their annual goals and starting ahead fresh when we come into May. So you can see it demonstrated in these graphs that Aaron has put on the screen here in the data. These are collected from the 1 in 5 funding rounds that we support here at SeedLegals. You can see that massive spike that comes in December, but not quite as big. People will try and close at the head of the calendar year. However, you'll notice even more of a drastic rise. It's 100% of an increase that comes to close rounds ahead of the end of the tax year. So to take advantage of this, essentially what we're going to talk about is how early preparation is key to maximize your timelines and utilize the spike in investor appetite that's currently at our disposal. What really matters here is following those above steps that you can see. Essentially, we're going to run through those in more detail throughout the webinar, but here we're looking just to ensure the round is closed and shares are issued to investors in line with that natural urgency that we find at the end of the tax year.
Perfect. And again, sort of thanks for that, Bethan. And we sort of just highlighted in regards to understanding like the reasoning that you would want to actually close before the end of tax year regarding SEIS, EIS, and ultimately it is the busiest time for fundraising. So again, moving on from that is what funding vehicles do you ultimately have at your disposal? So what is a funding vehicle? How to use it and when to use it ultimately. So a funding vehicle or mechanism it's the legal mechanism on how you as a founder will actually be taking in investors' cash. So we'll be diving into a couple of different mechanisms. Ultimately, we've got three at the disposal, running through the pros and cons of each of them and ultimately when it's best to understand and utilize them. So first we've got our seed fast. So we refer to them as seed fast, but within the wider market, they're referred to as an ASA, which is ultimately stands for Advanced Subscription Agreement. So in short, investors would subscribe for shares in your next funding round in exchange for cash now. Now that in exchange for cash now is the key aspect of why you would look to utilize a seed fast within your fundraise, because it's directly giving you access to capital now versus just having it on a commitment or on a term sheet. So you're actually banking that capital nice and early. Some other ways or reasons why you would use a seed fast is ultimately because potentially you're at an early stage, this is your first fundraising round, valuations are quite difficult to ultimately agree upon, right? So within this mechanism, you can ultimately decide your valuation later. Now, what I mean by that is because it's technically a convertible equity mechanism, meaning that no shares are getting issued until a conversion event then happens, which can look like one of two things inside of a round or outside of a round. So it gives you that opportunity to decide your valuation at a later date, which then in turn, because you're banking that capital nice and early, it actually allows you and gives you the opportunity to start to kind of raise your valuation throughout more capital that you're taking in through this mechanism. It allows you again to raise smaller amounts up front. It allows you to bank capital nice and early ultimately, which allows you to again get ahead of the curve when it comes to your fundraising and start putting that capital to work as well, showing that traction, showing that commitment. Again, like I've just described, capitalizing those commitments nice and early. Because a seed fast or an ASA is ultimately a legal document, it's nice and quick and efficient. Because you've not got long form documentation that is going to be impacting potentially the speed at what investors sign, meaning you've not got shareholders agreements, you've not got any deeds, etc. It's just one document per investor, meaning that you can move quickly and efficiently within taking in that capital. And again, an important part is that flexibility of outcome. So like your valuation, you have ultimately two ways to then convert that equity outside of a funding round or inside of a funding round as well. Just want to note on your seed fast and ASA, per HMRC, you have 6 months to ultimately convert that capital into shares, and that's to stay SEIS and EIS eligible, and that's a legal requirement from HMRC. Then you move over onto your price equity funding round, right? So this is kind of your most common on what you'll hear a lot of individuals doing or referring to as their fundraising round. A price equity fundraising round has multiple steps that we'll ultimately run through, but before we jump into each of those steps, the way that I always like to describe a price equity funding round is it's like a bus, right? So ultimately, you're trying to get individuals onto that bus, every seat booked, but until you then get every single seat booked, it doesn't go anywhere. The bus can't move from anywhere. Whereas going back to our seed fast, it's kind of like individual taxis that can just leave at individual points once that individual's ultimately ready. So within your price equity fundraising round, first of all, you've got what's called the term sheet, right? So that's step one. That's your starting point of that price equity fundraising round. And that's really the negotiation side of things. Because ultimately, that's where you're going to be negotiating any valuations, you're going to be negotiating share prices and any small terms at that point. The term sheet ultimately is not a legal documentation. Can I just ask everybody to make sure that they're on mute? I'm just getting some feedback on my side. There we go. Okay, awesome. So yeah, and then you go over to your shareholders agreement. And now that is the legally binding document, right? So you're going to need to get every single investor that's in this round to agree upon that shareholders agreement, and that's signed, because that's your legally binding agreement. That's when you're bringing all these individuals that have committed through the term sheet into the actual legal mechanism, which is in your price equity fundraising round, where you'll be stipulating different terms, outcomes, etc. And again, that's what referred to as part of your long form documentation. And then you've got your disclosure letter. Again, all shareholders, new shareholders will need to then sign this. Again, that's really there to protect you and the company ultimately and be transparent around debts, etc. Then you've got your articles of association. Again, that's the rule book, right? So if you're looking at stipulating any sort of option schemes, growth shares, etc., normally they would be stipulated in the articles of association as well. Then again, point on the articles of association, that doesn't need to be signed. It's only a disclosure letter and shareholders agreement that ultimately can potentially delay you closing that round, because you have to get everybody on the same level and in agreement upon signing. After the articles of association, you've then got your shareholders resolutions, which is up to sort of 75% of the shareholder resolutions normally will be signed by shareholders, which is authorizing this issuance of these new shares. Board resolutions, ultimately, it's corporate governance, that board sign off to actually complete and start the closing process of the round. After your resolution, that's when you can start to take in capital. So going back to the beginning, ultimately, of when I was referring to it as the bus can't go anywhere until every single seat's filled and every single seat's ultimately paid for, which is in your shareholders agreement, disclosure letter. Then upon your resolutions, that's when you can actually start to take in that capital that's been committed through that term sheet. Then you've got the issue of shares. Now, again, if we're referring back to that we're wanting to close it out before the end of tax year, in order to ultimately for these investors to capitalize on their SEIS and or EIS allocation, shares need to be issued before end of tax year. Okay, so that's super important. It's not when the money is actually invested. It is when the shares are issued to Companies House, because that's what HMRC will ultimately check. Perfect.
Amazing. Thank you, Aaron. Last but not least, we've obviously already had 2 out of the 3 mechanisms that Aaron's gone through. We also have the instant investment tool. This is another taxi agreement, if we're following Aaron's analogy, so another one that's per investor. The instant investment is a provision that you can enable within your priced equity round, as laid out by Aaron previously, and it can also be used as a standalone funding vehicle as well. An instant investment can be thought of as a straight cash for equity agreement. So as a seed fast is cash now, equity later, this is a straight cash for equity. The 3 main benefits you can see laid out on Aaron's slide here, but essentially they allow you to quickly and easily top up a previously closed round, regardless of the raise amount. So no matter how big or how small the investor is looking to come in for. This is a mechanism that honestly at this time of year will prove even more beneficial during the change in the tax years that we're obviously about to approach very soon. If you find yourself in a position, where most investors are looking to close before the end of the tax year, before April 5th, that's most often the case. The seed fast, the price round will allow them to do so. But if you also have an investor who's looking to get a head start on the next tax year and invest, soon after it ends, so coming into end of April, May, an instant investment will ensure you don't miss out on any of that cash, essentially, allowing you to bring them in straight after Q1, where the funding round has closed. A further use case will be even before that. If you have closed a round already within your business, or you're soon looking to do so, you find, okay, I've closed perhaps in February, March, and due to that natural urgency that we see, you have some investors who are still looking to invest. This instant investment tool will essentially mean you can get access to their cash. And as it's such a simple cash for equity situation, we can make sure that the shares are still issued ahead of April the 5th as well. Amazing. So we've run through the investment vehicles that we have at our disposal, but obviously to get to that point, we need to make sure that all of our ducks are in a row essentially, and that we are getting investment ready, so to speak. Aaron has alluded to the first one of these things a few times. This is our SEIS EIS. This is essentially what helps ensure angels and first-time rounds stay pretty steady year on year due to the investors involved having specific timelines because of this scheme. SEIS and EIS are the UK enterprise investment schemes. I'm sure most of you on this call are familiar with it, but for those who aren't, they're essentially tax relief schemes that de-risk investment for UK investors, incentivising them to come in. You can then raise £250,000 within your first 3 years of trading. This gives the investors a 50% tax relief. You can also then utilise EIS within your first 7 years of trading, giving them a 30% relief up to 12 million raised as well. So obviously, based on those big numbers, there is nothing else like it outside of the UK. So obviously, it's a no-brainer. As you can see on the slide here, 90% of UK investors will only invest in SEIS, EIS eligible businesses. We had a little look at previous tax years and found that 85% of founders, either before opening a round, have already applied, or they're planning on it, they're about to apply before they actually open their round. It's just become such a prerequisite when you're looking to close in Q1. It is literally the sole reason for the urgency that we see at this time of year. It's what causes the Q1 rush in fundraising as investors are balancing their own personal accounts, assessing tax situations, and often using the final allowances that they have for the specific tax year before that chance is gone. It seems to always be the case that there is, such a large amount of capital to deploy and now a limited amount of time to deploy it. This is the beginning, essentially, of the competitive edge that you'll have in the fundraising process. So we just want to ensure that the business is SEIS, EIS eligible.
Perfect. And again, just wanting to caveat before I jump into this is ultimately, if you've got any questions, just use that QR code there and submit them through there, and then we'll be able to sort of spend 5-10 minutes answering any questions that you have after this call. So yeah, again, like getting all of your ducks in a row, right? We're kind of looking at it, going through steps. So ultimately, you've done your SEIS, EIS advanced assurance side of things. So you've got that approval letter. And then like what we've just discussed in regards to, well, how are you looking to take in that capital and when are you looking to take in that capital? So we're then looking at these three mechanisms again. Now, as you can see on the right-hand side, you've then got your kind of seed fast. Now, ultimately, that sometimes is used to raise ahead of your round. Just like I was saying, you can bring capital along and bank capital early and as individuals. Then you've got your funding round. So your price equity funding round, which is in the middle, which is ultimately used to either convert the equity and bring in some other investors because they're wanting access to the long form documentation. And then as Bethan kindly described in your instant investment, again, that's used to either act as a rolling close or just top up any previous investment that you're wanting to get in. Now, again, these are super, super important mechanisms and vehicles when it comes to this time of year. The reason being is, like we just said on the price equity funding round, you have to get all signatures, all of your ducks in a row before that vehicle can ultimately close and move. Okay, so if you do have some potential last stragglers when it comes to actually a bit of that getting close to that tax date, ultimately what you can look to do is just reduce it down, take in what you've got, and then take the rest of these investors that potentially have been a little bit slower or potentially delaying it for the rest of the investors through that instant investment top up. So it's really, really clear to understand kind of when and why you would look to use that seed fast, when and why you would look to use price equity fundraising round, and when and why you would look to use that instant investment, because it not only can be used from a legal perspective on how taking that capital in, but also from a strategic perspective, which is super, super important given this time of year. And it's really crunch time when it comes to Q1 is the most active for investors, given the SEIS and EIS allowance side of things. So again, jumping into closing tactics, right? So you've creating that urgency. Now, ultimately, you've already got urgency on your side, right? Because it's end of tax year. So investors are already saying, I want to get my full 200K SEIS allowance out of the way, or I want to get my EIS allowance before the end of tax year because they're looking to minimize their individual tax bills, okay? So that's ultimately your urgency that you're then looking to play on when looking to close or when looking to raise that capital. So the wins are really, really behind you when it comes to creating urgency, just because you've got that natural side of it, given that it's end of tax year coming up in literally less than 2 months. Creating FOMO, again, like we mentioned with those seed fasts, it allows you to bring on early stage capital, which ultimately allows you to show that traction, right? When you've been an early stage founder, sometimes investors can always say is, okay, show me some traction and then we'll get back to you. So ultimately, that seed fast allows you to show that traction, that early stage traction, increases that fear of missing out for future investors as well, with the chance to start to increase that valuation because you're already banking that capital nice and early. Again, like I just said, showing that traction, raising ahead of your round, and then understanding what their incentives actually are. I mean, I'm a huge believer of incentives always drives human behavior. Ultimately, you've got that incentive around the SEIS and EIS, right? So SEIS, they've got that 50% tax incentive. EIS, they've got that 30% tax incentive. They're going to want to capitalize on that before the end of tax year. So again, that's their incentive for coming in at this point before April 5th, ultimately. And again, I just wanted to highlight the ideal timeline in regards to step by step, because we've been through everything step by step, and it's probably actually, well, okay, but what's the timeline on a lot of these things? Or when should I look to implement if I've not already implemented some of these things to start to bring on investors and really sort of put my best foot forward when speaking to investors as well. So we sort of put in the ideal timeline ultimately based on all of our data going back a few years. Now, when should you speak to investors? We always say as early as possible. It will always take a little bit longer than you maybe expect. So start speaking to investors as early as possible. Even before you've gotten that advanced assurance side of things, don't delay the conversations with investors and that reach out to investors as well. Then you've got your advanced assurance, your SEIS and EIS application. If you're looking at closing before end of tax year, you're probably looking at getting that application reviewed and in between the 1st and the 12th of February, right? So if you haven't done so already, I would probably suggest doing it as soon as possible to really, again, just make sure that you're not leaving anything last minute. Then you're going down into informing your investors of the advanced assurance side of things. Ultimately, you've already started speaking to investors. Some investors are happy to come on board without it. Some investors will want that approval documentation in first before they then invest that capital. So your next stage is ultimately informing those investors that your advanced assurance for SEIS and or EIS has been approved. And then it's time to then send funds, which then goes into, okay, well, how are we going to be taking in those funds? What legal vehicle and mechanism we're looking to take them in? That's kind of your March, okay? February, obviously, earlier the better, but you don't want to then leave the closing process within a couple of days before end of tax year, because again, you want to give yourself enough time moving forward so that any hiccups come up, we're not in panic station mode. There is enough time to ultimately fix them and solve them. Then it's your final review and close. Like I just said, you're just wanting that final review process, that close, to be clear, efficient, and quick. So you're looking at doing that in March and April. And then you've got your issuance of shares to investors and the filing of the SHO1. That needs to be done this tax year. So that is what ultimately HMRC will look at when issuing shares to investors is the filings need to be done before April 5th ultimately. So again, like I went back to, is don't delay your closing round because you have an investor or investors ultimately who's late sending their funds. Instead, close the round with a top up enabled and add those late investors with an instant investment top up ultimately later on. Again, I'm going to stay just sort of a couple of seconds longer on this slide, ultimately just in case you want to scan that QR code to ask any questions, because then we'll kind of ask them, we'll answer them after today's call. We won't be able to answer them all, but we'll try and get through as many as we can ultimately. Perfect. And yeah, I guess sort of how we can help us at SeedLegals is, yeah, we can simplify those fundraising opens. You've got that expert guidance from us. Again, we have a team that do fundraising day in, day out, ultimately. So they'll understand what's eligible, what's not eligible, and suggest and advise on the best guidance there. Closing capital in record time, insight and analytics. Like I said, we do 1 in 5 fundraising rounds within the UK. We have all of that data to then support and back up when it comes to sort of advising on share price, etc. Seeing the market around, okay, is there any similar businesses within your sector? What valuations have they been at what stage have they been at? And streamlining investor communication, everything's done on platform, meaning you don't have lots of different documents kind of floating about in random folders. Everything's done from one platform. So it streamlines that for the investor side of things. And then again, speeding up that fundraising closing as well.
Amazing. Thank you so much, Aaron. Absolutely love the timeline aspect of what you were just mentioning as well to get everything in order. Anyone who's essentially joined a little bit late or just wants a bit of a recap, I'm now just going to run through a summary of what we spoke about today before we can go in and answer some of your guys' questions. So thanks for sending them through. To summarise, the reason for you to close before the end of the tax year is due to the natural urgency that's present at this time of year. That's unlike no other. This time of year sees the biggest rise in investment raised due to the SEIS, ahead of what will essentially then be the biggest decrease in funding rounds experienced due to the summer months, like we mentioned earlier. So if you're looking to raise within the next 6 months or so, now is the time to get prepared to do so, to try and capitalise within that. We then also spoke about some funding vehicles at your disposal to be able to do so. So now that you have the tools, enter those investor conversations with the confidence on the different mechanisms available, you can then keep your fundraising approach flexible using a combination of ASAs or seed fasts, as we call them here at SeedLegals, ahead of your round, a priced round to then bring all your investors gathered together by the same rules, like the BUS, as Aaron mentioned. We also then have the instant investment tool to top up that round, or as a standalone to ensure that no cash is left on the table. We also then essentially just ran through the ducks that need to be lined up to allow you to get there. Your SEIS, EIS Advanced Assurance is the longest piece of the getting investment ready puzzle. It's essentially the deal breaker or maker at this time of year, as it's what causes the natural spike in the urgency. So as Aaron rightly mentioned, if not already obtained this week or as soon as you can, is honestly the time to be getting your application in. And then utilising funding vehicles at your disposal will also be key in making a good impression and ensuring you're able to get access to the capital in the best way possible as the conversations progress based on the individual circumstances. These will also be paramount in creating the FOMO, showcasing traction to ensure we get to the final review and issuing shares, which is the important part ahead of the April 5th deadline.
Awesome. Thank you very much, Bethan. Well, hope everybody's enjoyed this webinar. Ultimately, we'll jump into sort of 5-10 minutes of answering some questions. I'll pop up that QR code again. But as I said, like at the start, this has been recorded ultimately, and we'll circulate that recording with everybody and also the deck as well. So I will leave this up just now, just so that you can maybe take sort of 10 seconds. If you do want to ask any questions, scan the QR code and it will take you through where we can answer any questions. Again, just want to sort of reiterate, if you are an existing customer, please reach out to your account manager if you do have any questions or want to get started on any of the pieces that we've described today. If you're not yet a customer, It'll be if you get in touch with Mira, who is our head of partnerships and community, via her email. So I'll allow you to take a picture or jot that down now as well, and then she'll be able to help organize a call with our team.
Amazing. We'll also try get the slides and recording out to you guys by the end of the week as well.
Perfect. Okay, then I will just jump over. Okay, awesome. So what we'll do, as I said, we will ultimately take the next sort of 5-10 minutes to answer any questions. And yeah, the first one that I see ultimately is, do SEIS funds, so like VCs, typically invest as a seed fast ASA, or do they typically expect price rounds even at a pre-seed or seed stage? I think probably I'll jump in here. So it's a great question. So it's a yes or no ultimately. When it comes to this, now when you've got your sort of main funds like Fuel, SFC, Hatch, etc., they'll ultimately usually come through on a price round because they're wanting access to long form documentation. Whereas some other smaller funds, mainly accelerators that have some small funds, they'll typically potentially come through on an ASA, but expect that conversion to happen within a price equity fundraising round side of things.
This is nearly finishing now, so what should I do?
Oh.
Okay, give me a call in a minute, will you?
Can we just make sure that everybody is on mute if that's okay? I'm trying to find who wasn't, but
I think it's okay now. They've moved in. We're all good.
All right, cool. Awesome. So yeah, hope that ultimately answers your question. But usually these funds will be quite upfront in regards to what they expect when coming to the fundraising side of things. So yeah.
Just
so
the question.
Other ones is.
Hi there. Hi, can you hear me?
Oh, if you just want to submit your questions, it's just so that we can control it.
I submitted that question, and I just wanted to clarify a little bit on it quickly. Is that okay?
Okay.
Yeah, thanks. So it's just that a matter of, I got a meeting with one of those funds that you mentioned today. Just curious if you would say is a good idea to ask them if they want to do a seed fast or ASA, or if they are open to it, or is that just a ridiculous question to ask for a VC fund?
No. So you can. They'll usually probably stipulate early on what they expect to come through on. So they'll say have X, Y, and Z in place, such as they'll send over if they send over a term sheet, that means they're probably going to be coming in on a price equity fundraising round to gain access to shareholders agreements, changes in articles, etc.
Okay, thanks very much.
Perfect. Sorry, go ahead, Bethan.
No, good. I was going to say, like you said, worth a go. See if they've already stipulated.
Yeah. And just sort of for this webinar, just because it's recorded, etc., and we just need to control. If you just submit your questions via the QR code, it just means that we can get through a couple more. But we'll answer a few more. So, I'm just looking. So do you need an investor agreement to apply for the advance assurance? Bethan, if you want to potentially take that one.
Amazing. Yeah, sorry, I was just going to copy and paste the link back in the chat there for the questions in case anyone had any more. But in terms of the investor agreement needed for the advance assurance, you don't need a definitive committed investor for the advance assurance section. Like we were saying earlier, so many people apply now before they do have that. You do need to show some potential interest from an investor or someone who may invest in the business, but it doesn't need to be someone who actually definitively ends up investing. HMRC just want to see that you're serious about fundraising. So if you do put someone's name down and then for some reason they don't end up coming in on the funding round, that's completely fine, just to get your application in. So no agreements are needed.
Also awesome. There's another sort of couple of questions here. When and how exactly is the instant investment set up? Is it at the same valuation of the priced round? So again, that's another amazing question there. Again, it's a kind of yes or no. So if you're taking an instant investment as a top-up provision from your price round, yes, it will be on the same terms as your previous round. So those top-up provisions will usually look like you will be able to raise X amount over the next 6 months, and they will be all on the same valuation. Whereas if you're using instant investment is ultimately an individual mechanism for a straight cash for equity agreement, then it can be set at whatever valuation you get sign off from, but ultimately that you've negotiated with that investor as well. And then the next one, does a seed fast move on to be a priced equity round and follow the exact same steps? Again, you have two options of outcome when it comes to a seed fast: is converting on its own or converting within a price equity round. So again, if it's converting in a price equity round, what it will convert at is the terms on that round. But if we dig in a little bit deeper into another layer of that, you can offer out discounts to early investors coming on board through a seed fast as another added incentive. So potentially those discounts can look like 10% maybe. That means that when they convert, and if they convert within a price equity fundraising round, they will receive a 10% discount on that valuation versus everybody else that has came on board. Okay, so that's what you can also stipulate as an added incentive to ultimately get those investors on at an early stage. If that helps, I don't know, Bethan, if you have anything you want to add to that one.
Was pretty much going to say the same if you hadn't mentioned the discounts as well. So that's sort of just a pre-agreement to the funding round, which essentially means it's a further incentive as well as the SEIS for people to come in sooner because they also get that added benefit of the discount.
Perfect. If an ASA does not issue shares immediately, how does this align with the instruction to issue shares before the end of tax year? So again, yeah, another super relevant question that potentially people that have came on board via an ASA in Q4 last year will be then looking to actually sort of, okay, well, what's the next steps here? So like I said, they would convert in one or two ways. Outside of a fundraising round, on the terms, so the long stock valuation, etc., or within a price equity round. So whatever one you decide to do, they just need to convert before the end of tax year. Okay. Now, like I said, they need to convert before 6 months in order to say SEIS and EIS eligible. But ultimately, they can convert within a week of investment, right? So at that point of where the shares need to be issued, you would then look to convert in one of those two ways: outside of a fundraising round through an instant conversion agreement, or inside the price equity fundraising round if you've got further investors that then want access to those long form documentation as well. Another question on EIS purposes that we may try without this one is: how is the trading period defined for EIS purposes? If a company has been dormant for a number of years, does it have to reapply for EIS qualification? That's quite a difficult one to potentially answer, just because we would need to dig in a little bit deeper in regards to the actual sort of ins and outs of it. But Bethan, I'll leave you potentially to answer that one if you want to.
Yeah, of course. You are right. We'd probably need to dive into the specifics of what is meant by when you were dormant, were you trading before that? Just a few questions, a little bit more in detail for us to gauge. But essentially the trading period they look at as when you had something available for sale, that's something that could have been bought or used. So within that, it's a 7-year period. We can then start to have a little look if there's anything that can help with extenuating circumstances there, like a condition B application, perhaps, that could extend that 7-year timeline if need be. But essentially, it's looking for 7 years and when something was available for sale. Of course, if we looked in the specifics a little bit more of what is meant by a dormant company here, we could perhaps see what there is to be done.
And one last one here is: does the investor have to indicate a certain percentage of willingness or commitment, I guess, in relation to how much you go for it in SEIS and EIS? So the answer is ultimately no. I think what that question is relating to is the commitment side of things for your advanced assurance application side of things. Bethan, do you want to handle that one since yeah, you're mainly onboarding? Yeah.
Of course. Yeah, I think that's right. Hopefully we got the right end of the stick with that question. Essentially they'll just be looking for 25% of the amount that you're looking to raise overall. That can be a combination of different investors. It doesn't need to be all one investor saying that they're committing the whole amount for the scheme. It's just getting to that threshold to be able to get an application, and this can be comprised of multiple different investors, whether that's some smaller friends, family investors, as well as people in your network, angels and things like that too.
Yeah, awesome. Perfect. Well, thank you everybody for joining. As we sort of stated earlier, if you are an existing customer, reach out to your account manager if you do have any sort of further questions or wanted to dig in a little bit deeper into sort of anything that we touched on today. Or if you are not part of SeedLegals, ultimately you can reach out to us via our live chat and you'll get introduced to somebody on our team who you can then have that conversation with. And like Bethan has mentioned as well, we have a recording of this so we can send that out and also send out a copy of the deck if you're wanting to refer back to that as well. But thank you very much for joining, everybody. And yeah, hope everybody has a lovely rest of their Tuesday.
Thank you, guys.